Lovely listeners, welcome back to another episode of It's No Secret. Today we're chatting about a topic that many Kiwis might still be experiencing and is a little bit close to home for people. I feel like it's always a hot topic talking about property. But today we are talking about those who recently bought a house. So we're talking about people that have bought a house in the last 3 years and the chances that you're likely to be in a position where you feel like you've gone backwards. So lots of things have happened in the last 3 years.
Lots of things have happened in the last 3 years.
Interest rates have gone up and then started to come down. The property market has been going down. It would be kind to say it's been flat. It hasn't. It's actually been going down. And what I guess sparked this topic of conversation for us internally is that there was a post made on Personal Finance NZ subreddit, which we love to peruse from time to time. And we've obviously talked about before on the show. And this is what the post said. So, we bought in 2022 as the market was starting to turn. Our house has lost at least 10% of its value, plus interest is still eating up a huge portion of our income. Things are improving slightly as we rolled over to a lower rate. We weren't in a position to buy it until our mid to late 30s, by the time we'd saved enough of a deposit. We'll be late 50s, early 60s before we're debt-free, assuming no major changes like job loss or illness. We were pretty cautious in the scheme of things, and when we bought, we had a 33% deposit that's now fallen to around 25% equity, based obviously on the decline of the property value. And our loan is about 5 times our combined incomes. But the juice really isn't worth the squeeze. The NZ housing market is cooked and most of the gains have been made by earlier generations. I just want more of my life back. Rant over. So we are going to dive in and talk about this. Tim, initial thoughts?
There's a few things in there that kind of I want to highlight a little bit. And
did this get a lot of uptick on Reddit?
It did actually. Yeah, they ended up locking it because it's one of those conversations.
Like from the spicy comments?
I think so. Okay. Yeah. Well, what I checked earlier today, it was locked, but this is about a month old now. So
were people being overall sympathetic or not?
There was a bit of both, interestingly, because it really depends at the end of the day what they were really trying to achieve. And from the sounds of things, it sounds like they really were after capital gain. And that's kind of what I was getting at anyways, but who knows? But a few things I want to highlight here is that we weren't in a position to buy until our mid to late 30s. Interestingly, that's very average, right? Most people are going to be in that position.
I read that too. When I first read this, I thought they're saying that as though it's a negative. Yeah. But it's most people are not in a position to buy until their mid to late 30s, perhaps even later in life. That's actually A-okay. Yeah. And we've talked about it on the show before, but the average age of home ownership in New Zealand is, I think, about 38, 36.
37, 38. Yeah.
It hovers around
literally
there.
mid to late 30s.
Yeah. Could not be any more bang on.
Yeah.
So that's not a negative, really.
Yeah, it's not a huge negative. I mean, it'll be better overall for, I guess, for people's minds if they can get into it earlier. But the reality is right now, that's pretty normal.
That's very normal.
And it's very hard to kind of steer away from, social media when it's just you see an 18-year-old buying a house who just worked in Pack and Save or something. I don't know. There's a few of those going around. And it's very hard to avoid.
Ignore those. Yeah. And not think that that's the majority when actually it's very much so the minority of people. 100%.
And we'll be late 50s, early 60s before we're debt free. That's again, that sounds kind
pretty
of normal.
Yeah. I know. I was thinking that too. I was like, I guess that is part of the pro and con of being someone that probably spends a bit of time in a subreddit like Personal Finance or in any of the Facebook groups the Barefoot Investor. If you're that type of person, you are going to see more of an exposure to, I would say, the edge cases, not the average or necessarily the norm in New Zealand. And not to say that people shouldn't work towards or aspire to being debt-free earlier, but really buying a house in your late 30s and having it paid off in basically 20 years is what they're saying is not uncommon. Yeah. That's very much so the norm for a lot of people, particularly given that I think this person, they don't give us any other information as to kind of where their overall life phase is at. But if we make some assumptions about what they're perhaps doing in their mid to late 30s, into your 40s, you're in the most expensive time of your life if you have a family. You have a lot of other costs and you also have very high home loan costs or home ownership costs. And so I think you've got to give yourself a little bit of grace with that.
Yeah. And the deposit was 33%, which is a lot higher than most people as well.
Which also I did think was kind of funny because I'm you can't really complain about only being able to buy a house in your mid to late 30s at 30, but then also on the flip side, you purposefully saved until you had a 33% deposit. Like part of me with that is like, well, if you wanted to buy sooner, you probably could have, but you would have had higher
interest rates or like things to pay off,
a higher debt. And there's perhaps reasons why they didn't want higher debt. And I think this also just speaks to the whole thing of like everything to do with money is a trade-off.
Yes.
You know, and your decisions and how it works with finances, like it's all a trade-off. There's no golden ticket.
Oh, yeah. That's very rare if any time there is like the most obvious answer being there, right?
Yeah, you can't have, an over 20% deposit and be buying in your 20s and then be debt free by like your mid 40s and not have it, it's just...
Come with a trade-off of some sort. You're going to be working your ass off if you do that, right?
Exactly. Yeah. Even if you are one of those, edge cases, like as you say, there will be a trade-off in some other capacity. Okay, so then what did the people of Reddit say? Like what were some of the critiques of this?
Yes.
Because there's one that I can really get around. Not that we want to like take this person out, but I'm just like, this is a comment that I wholeheartedly agree with.
Oh yeah. So I put in the top comment here, which I also resonate with this like statement. And then this person's reply was, you bought for gains rather than a place to live. And that's quite an important one, right? Because we always talk about how, what's kind of the intention with your house? Are you trying to buy it for to live in, or is it an investment at the end of the day?
Yeah.
So as he goes, there was a comment in the sub I read a couple years ago that really resonated with me. You can have capital gains from housing or affordable first homes, but not both. New Zealand needs to choose. You have a home now. It was a purchase that you thought was worthwhile just a few years ago, and the payments are cheaper now. I guess you have just lost the dream of a get-rich-quick scheme, but you still have everything else. Yeah. Just remember, your loss of capital is another person being able to buy a house. For you to gain, they would have had to lose.
Yeah.
So
fair. I do love this. I think that, the very initial comment of like you bought a house for gains rather than a place to live is really what this, it does kind of say that, I guess the original poster is really talking about the juice isn't worth the squeeze. And it's like, okay, well, what's the juice that you're expecting of this equation? Yep. Because for me, as a homeowner, the juice that I'm expecting is that I have a nice place to live that works for my lifestyle. Yep. And I'm happy to actually like be living and be safe and have a roof over my head and be able to provide for my family. I am not expecting my house to be increasing in value every single year and be the cornerstone of like our future financial security. Because if I wanted it to be the cornerstone of our future financial security, as this person has rightly mentioned, I would probably be buying a different type of house.
Yes.
I'd be buying in potentially an entirely different area, a different style of property, something that actually has had some numbers run against it.
Yes.
For things like yield or potential capital gains or, future rentability, all those kinds of things. It is very, very uncommon that people manage to tick both the boxes of like the house that you live in also is a perfect investment property. Yep. This is essentially what you're asking, right? Yep. Like people buy investment properties to obviously gain from the property market. And so if you're expecting really great gains from your primary residence, are you buying a primary residence that would also qualify as a solid investment property in the eyes of someone that was just looking at it like completely like objectively? Yeah.
Yeah, it's a hard one. I feel like every time I talk to people as well, like in my age group that want to buy into a house, they're like, I just want to get into the property ladder early so I can, make a lot of money out of it like down the line. And I'm just like, okay, that's good. That's good.
But do they realize it down? Well, I mean, do you think they know what are they expecting down the line is?
I don't know. That's the thing, right? Like people have all these grand plans of like, I'm going to use my initial property to leverage into another property. And then that can like pay off each other and that kind of stuff. And I'm just like, so you're going to keep doing that until when and then how big of a like loan are you going to get out at the end of the day, and how are you going to manage like those 2 or 3 properties? Are you going to be in the same town that whole time? Are you all those like kind of questions there, and it just sounds like it's just one of those like classic Kiwi chats where it sounds really easy to do, but then when you actually do it logistically, it's like a lot of things happen and can go wrong. Like especially 100%. Right now as well, right, where I think it's a renter's market. There's a lot of rental options out there right now. And if you were to go invest into a property now and then can't be able to rent it out, you're kind of
a bit buggered.
You're a bit buggered there. So that kind of sucks. But
exactly. Yeah, I think that is a very fair point, Tim. And it's it is just one of those things of, I think, like Interestingly, this person is making the assumption that the housing market is cooked because all the gains have already been made.
Mm-hmm.
And I would call bullshit on that a little bit, because that is a little bit like saying, I don't believe that the property market will ever go up,
Mm-hmm.
which is a little bit like saying, I don't really believe in like the principles of capitalism and how that would work.
Sure.
But
Yeah.
equally, I think if, you've done any kind of reading in New Zealand, people generally do agree that there is a supply and demand problem when it comes to like New Zealand housing that is causing a bit of a challenge. And people are really trying to solve the supply problem because it is important ultimately that people have places to live.
Yes.
And I think that that's really important for people to remember. It's like, we're trying to solve the supply problem. There's people like, Simplicity Living or certain types of developers, that are really trying to make affordable, like mainstream housing for people so that people have a safe, secure place to live.
Yes.
They're not doing it so that you can make money. There are other ways to make money.
Yes.
There is the share market. There are other asset classes. There's other types of property in which you can invest in to make money. Like, you don't necessarily need to be making money from your house. And I just think that, like, generationally, it was just kind of through luck and the various different times that, many of our parents or grandparents managed to make a lot of money out of their home, and therefore they didn't need to make hard choices about trying to invest in or make money through other asset classes. It was basically like the lazy... Don't want to say uneducated because these people are educated, but like, you don't need to do anything, right? It's the laziest way to make money, where it's just like, oh, I'll just buy a house and I'll hold on to it. And in 20 years time, it would have like more than tripled in value, and I've paid off my fairly nominal mortgage, and therefore I have a huge chunk of equity in this property and I can just do something with that. That was essentially like the really lazy way to make money. And people are now complaining about the fact that that cannot be repeated. And what I would maybe say to those people is like, there are plenty of other ways to make money. You just perhaps need to look a little bit beyond
housing.
Correct.
The status
and
quo.
Beyond your own house. And be okay with the fact that your own house is really a place for you to live and have security, not so much making money.
Oh.
Unpopular
100%.
Viewpoint though.
Yeah, I think it's kind of growing though, interestingly.
Yeah.
I saw a clip of our favorite person, Ramit Sethi. He was on the Diary of a CEO podcast.
Oh, fun.
Yeah.
I haven't listened to that episode.
Have you not?
Have a listen. Is it good?
Yeah, no, it's really good. I mean, it bangs on. I mean, it's a bit of confirmation bias for us, but it's...
Tell me more, Tim. I'm here for it.
I mean, the main thing that he was talking about was like the whole renting versus buying a house situation, right? Like he's a big proponent of renting because it gives you the flexibility to do whatever you want, and you're not tied down to a certain place. And a lot of like the status quo of thinking there is like, okay, cool, you're renting and you have that flexibility, but then what if you're just kind of throwing money into a pit, and then but like, are you really? You have the benefit of just being able to get up and go whenever you want, and not have to worry about.
And you definitely do not have the same overheads as you would as a property owner. And I think sometimes people are like, oh no, but that's not true. And it's like, yeah, but even if you were paying the same amount of rent as you would a mortgage, you still then don't have the overheads of like insurance, rates, maintenance, all those other things that do pop up along the way as well. And we had, there was a recent example with Luke Kiwis from Keep the Change being interviewed on the Checks and Balances podcast about this exact topic, where he very purposefully rents in order to give him the flexibility of his like life and choices. And he's therefore investing in other assets outside of a home now to the tune of like $700,000. And, there's a lot of people that don't have $700,000 worth of equity in their house. And yet they seem to, I think, like find reasons to throw stones at the idea that perhaps taking a different path has validity, when actually, like, when you look at the numbers, it certainly does. It's just the comfort levels I think people grapple with a bit.
And I guess it's also the status quo idea, right, of just housing housing goes up. Which, I mean, it does tend to, right? But like, the problem is in New Zealand, it's unproportionately.
But it does also go down, Tim.
Yeah, it also does go up.
This is the thing. Yeah. So, I mean, we recently had Brad Olson from Infometrics come and speak at one of our conferences for our financial advisor groups here at Kernel. And he did have some interesting slides around housing price growth. And, interestingly, their forecast that they ran in January of this year is expecting housing price growth growth to be limited, pretty much flat if you look at it in a chart, and we can share the chart online, until basically 2029 and beyond. So where are we at now? 2025. So like 4 years, you know. So this person that's saying like that their like equity has reduced, they could certainly be looking at that being the case for the next 4 to 5 years. And that is, again, like, I think this is what really speaks to the whole thing of you need to think about why you're buying the house. Because if you have just bought the house to live in and you can still afford your mortgage and you have job security, why do you care?
Yeah, it's a good point.
Like, why do you care? You know, you sure, like, it's a bit of a
I mean, it sucks.
Ego
right?
hit to revalue your property on your balance sheet if you're running a little spreadsheet I am, and I know you are, Tim. Like, sure, that sucks, but you're the only person that's seeing that. Nobody else cares, and as long as you can still afford your mortgage and you don't have any like income challenges, why do you care? You're caring because you're ultimately hoping it's some type of like investment return.
Yeah, or like a quick way to
get ahead.
Rich. Yeah, or get ahead.
Which, hot tip, it's not. If you've lasted this long. It's not.
Oh, funny.
Exactly. And yeah, as Tim said, it's currently a rental market, or, you know, a good market for renters, which is, again, really great news for people that are opting for the rent vesting strategy, because perhaps they're purposefully renting and deploying their money into other investment options and making the most of like flexible living.
Yeah.
I recently was chatting to someone who does have an investment property, and they were telling me about the fact that their tenants, they needed to let in tenants that had 2 dogs because they needed the dog premium in order to meet the rental amount that they wanted for the house.
Interesting.
To still be a good rental. Which I was like, you know, then you're needing to make compromises everywhere.
Yes.
Right?
Yes.
So yeah.
Nice. Oh, interestingly, on the charts as well, we have the returns here where it says rental returns aren't high relative to the work. So we have 2 lines here that basically show gross rental yields, which is, you know,
pre-costs, pre-tax,
and then you have real bond rates, which take into account inflation, and they're all pretty much around the same level at around 3.5%. So
yeah, exactly. So I guess the point is, for all the work that you can do with like managing tenants, managing real estate agents, like needing to deal with broken things, maintenance, still paying the rates, all that kind of stuff. Also, like, your rates are not going down, so that's a sad point for everybody. It's like you could do that, or you could just be putting your money in something that you don't even have to manage.
Yeah, like a bond, and it's very boring.
Correct, and essentially getting the same level of return.
Yes.
So it's not painting a strong picture.
Yeah, at the moment,
for property
really
investment.
But this.
But you know, I feel like people still love it. So I mean, is a house really an investment? I think you could probably definitively get the picture that Tim and I think no. Do you think no, Tim?
Look, if you give me a spreadsheet that shows me otherwise right now, I'm pretty much a no. I'm really big on like the whole, what do you call it? You live in it. You buy a house to live in it. And it's a very interesting conversation, because obviously, like, if you ask that to someone else, like, you're going to get a completely different answer, especially those people that love and live and breathe property, because that's the way they got rich, and that's the way they're going to tell everyone else to get rich. So figure out where you want to hear it from. But to me personally, it's
I think as well, like, if you are in a situation where your home is the only asset that you do have, it probably can be quite hard to stomach a message that's telling you that that's not an investment, because maybe you're thinking like, well, this is the only asset that I have the ability to like deploy money into, and I don't have the resources to be able to invest in shares or other things. And that is valid. Like, I can see why people might be a bit annoyed at us telling them that their house is not investment, but you also just, really do have to think about that idea of like, well, is where you're living a place that you would buy if you were actually just buying solely for an investment reason? I didn't know that Graham Fowler, who is a very well-respected property kind of investor, long-time property advocate within New Zealand, agrees with us, Tim. He says that the home you live in is not an investment. And I could not love this sentiment more. So very pleased. But he, I think also, raises a very good point that investments in their essence should pay you.
Yes.
So that's also another thing. Like your home is not paying you. It's not an income generating asset.
Mm-hmm.
And I can hear some naysayers that'll be like, but I'm renting out a room in my house. Like, okay, cool. You're probably doing that to help ease your costs.
Yes.
You're not doing it in order to like maximize your return and your income from that asset. So yeah. Really understanding that a home is a lifestyle choice, not a financial asset meant to grow your wealth.
Yep.
I think can help people also decide like what type of home is important or like the best thing for them.
Oh, 100%. And I do think that there is a place for property investment as well.
Yeah.
But you just really got to do the work into making sure that there's a difference between the home you're going to live in and property that you're going to invest in.
Correct.
Yep.
Entirely different set of criteria and like decision points. And I think understanding what that is really important.
There we go.
Oh,
great
chat
on this.
I mean, I don't think I have any good news for this original Reddit post.
Yeah.
Other than like, I feel that nobody likes to lose money in anything.
Of course.
That kind of sucks. But equally, like, if you don't have an issue with paying your mortgage and you do have job security and you're not intending to sell that property for a period of time, why do you really care?
Yeah. And who knows, their sentiment might change once they actually kind of think about it slightly differently, right?
Yeah. And actually, I will say, even if you did need to sell the property because you're like, let's say your personal scenario changed and you needed to upsize or you needed to downsize, arguably you're still buying and selling in the same relative market. So even if you have to be, taking a sell price that's like flat or even down a little bit, that's okay because you're buying back into the same market. And so, I think that's the other thing that people just think about differently, irrespective of shares. It's like, why do we have the mentality that the share market goes down and everybody's like, woohoo, shares are on sale, let's invest. And yet when it comes to property, if the property market goes down, all the homeowners are like, oh no, I couldn't possibly realize a price at, 1.2 when 3 years ago my house was worth 1.5.
Yeah. Who knows?
Yeah.
Who knows?
Therein lies the illogic of money, finance, and psychology. So on that note, thanks for tuning in. Big thanks for Kernel for enabling us to do what we do. Don't forget to hit like and subscribe wherever you're tuning in, whether that's video on YouTube or listening on Spotify or Apple Podcasts. If you've got any questions, feel free to get in touch at It's No Secret NZ on Instagram. We would love to hear any episode requests, feedback and more. Feedback welcome on this app because, again, property is a hot topic and we do not mind hearing your alternative views. See you next week.
See ya.